India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's midweek, Wednesday morning, and inching closer and closer to the election results. Markets, of course, showing signs of nerves like what we had yesterday, the selling off from the day's highest point and ending down on a day-on-day basis. We're coming to you from the CNBC TV18 Motilal Oswal studios. Lots to track, lots to cover. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning. Good morning, Nigel.
Morning.
So some volatility, little bit of, resistance at the 23,000 mark, but nothing concerning. Just a little bit of trepidation ahead of the election results.
Well, that's right. And, I think a week or so ago, we were talking about NVIDIA's numbers and, they were good, but the stock has gone up considerably. I'll tell you what, post the numbers in the last 1 week, the stock is up another 15%.
Wow.
That's the kind of...
1,100 or...
It's more than $1,100 right now. Overnight, it was up close to around 7%. So that's clearly in a world of its own.
Absolutely. It goes through, I was reading something, it goes through phases. I mean, the new product which has come, Blackwell, which is the new sort of GPUs which they produce. I mean, it flatline saying, well, how much more can it grow? And then they come out with earnings and a new product and then goes up another $200. It flatlines and then goes up. So I don't know how long it'll continue for, but it's been an incredible ride over the last 2 years or so. Well, let's just talk about here and now, right? And what you need to know as we begin another trading session. And, I'll start with yesterday where we left off. Not in a very good way. But again, I said this yesterday as well. Is there really something insightful to take away from yesterday's trading session except the fact that it sold off from the day's high before 12 noon and then selling accelerated in the last hour? Not really. I mean, looking at yesterday, you can't make trading strategies or anything over the next couple of days except to say that there is, of course, nerves in the market because one doesn't know till one knows, which is, of course, Saturday exit polls. And by the way, on Saturday's evening, you'll get the exit polls. That's the 1st of June, once the last phase of polling ends. Typically, the exit polls will tell you broadly the direction of the result in the right way. They underestimate the extent of the win, etc. But, they'll tell you... so Monday, essentially, is going to be a big day. And then, of course, Tuesday, you'll get the actual results. Now, I'll just come to two data points, which we've been sort of talking about non-stop, which is, what FIs have been doing. And that's been the big sort of incremental marginal impact to this market. They've been big sellers. In futures, they've been shorting. In cash market, they've been selling. And in index futures, they continue to add longs now. So they're net long about 47,400 contracts or so. This is as of yesterday's close. This is, a big change because they were short 2 lakh contracts 4 days back. On the cash market, and we've said this, the selling intensity has been going down. Yesterday, there were small sellers. There were small buyers, beg your pardon, very small. The big sort of bulk of the heavy lifting has happened from DIIs and local institutions in that sense. Now, equities overnight ended, I would look at the Nasdaq more than the Dow. The Nasdaq was up about 0.6%, so I'd go with that. But, you look at the Dow and the Nasdaq, it would appear as a bit of a mixed picture. The US 10-year yield jumped 8 basis points. We are now back above 4.5%. Remember, the 2-year is already closer to 5%. You had a non-voting member of the Fed, that's the US Federal Reserve, who made some comments. This is Kashkari, who essentially said that many more months of positive inflation data would give me confidence that it's appropriate to dial back. So not yet exactly putting his neck out and saying, well, what we have is good enough for us to start cutting. Dollar index was flat, 104.7. Oil prices have moved up a little bit at about 84.5, 84.5 for dollars. But again, we're around the 100-day moving average and the Brent here. Now, just to sort of look at the market levels, again, it remains a very tightly ranged kind of a market without any big breaks on either side. Supports for the Nifty will come in at the 40-hourly average, which is now at 22,817. Very close by, 70 points out, and we are there. 22,888 is where we left off yesterday. And then you look at the 22,700 levels broadly. So let's hope that doesn't come into play and these supports are held. Now, on the way up, of course, 23,110 is the immediate upside level. And beyond that, you look at fresh highs. Nifty Bank also posted a negative daily close. And Nifty Bank had been sort of underperforming in the last couple of days. It did better than the Nifty. Here, the support comes in at 48,812 and pretty close to where we left off yesterday. And that's also the 40-hourly average. I think, volatility is the name of the game. There's going to be nerves and there's going to be sort of a little bit of nervousness as we go into election results. That's been, I think that's very, very reasonable to expect as well. So if you expect anything otherwise in terms of a big move, directional move before over the next couple of days, I think that would be foolhardy. GIFT Nifty will come up on your screen. I'll tell you at least the opening kind of levels this morning. I think we'll have that up in just a bit. Yeah.
So the GIFT Nifty, is indicating a fall of around 115 odd points.
Yeah.
So I think this morning there's a little bit of trepidation, right, that you can see on the screen. And there are a couple of reasons for that. Of course, the market has been facing hurdles at the 23,000 mark, so that's important. But let's look at the flow situation yesterday. There was large buying from domestic institutions, and that's something that continues. So we've got that relentless support from domestic institutions. Almost 3,300 crores of buying. But let's put that into perspective, because yesterday's FII and DII data includes 5 block deals worth 4,100 crores. So better to, just keep that in mind when you look at this large number as far as the DII data goes. Now, in the month of May so far, money has been pumped in thick and fast. So 45,000 crores has been put in from DIIs. So keep that in mind. The US markets were mixed, but the important bit is what happened in the Nasdaq. It topped 17,000 for the first time ever. And of course, we've had some really strong moves coming in from the likes of Nvidia. So that is a space to look at. Now, as I said, the Nifty is facing resistance at 23,000, but there are some stocks that you can watch out for. Hindalco, of course, will be in focus as the company looks to raise $1 billion from the Novelis listing on the NYSE, and now the pricing is also out, so more details on that coming up, but that will definitely be front and center today. Apart from that, we have 3 important numbers coming out. There's Tata Steel, there is Bata, there's also Mazagon Dock, and Mazagon Dock has had a dream run. So let's see how those numbers shape up. And then IRCTC will be also reacting to their numbers, which was a mixed bag actually this time around. The revenues went up fine, 20%, but the margins were under pressure, down 220 basis points. A couple of other stocks like Amara Raja Batteries, etc., also reported a good set of numbers. So keep your eye out on that. But largely, you'd have to say the market is facing a bit of heat at that, 23,000 mark. GIFT Nifty suggesting a lower start.
Well, that's right. And you have the Asian markets as well that are under some pressure with Brent crude prices spiking up. So global headwinds are there up against us today. But yesterday we ended virtually at the low point of the day, but it wasn't really selling that was intensifying. There was lack of buying ahead of a big event. The money flows seemed to have dried up a little bit, and that explains why the broader markets were under more pressure rather than the frontline names. So that's one pocket. We'll wait for a couple of sessions out, and then things will normalize once we get the election verdict out of the way. The Nifty Bank, that plays out the weekly expiry today, so that's going to be the swing factor. Yesterday it ended virtually at the low point of the day. What did the FIs do? They added 10,000 long contracts. They covered some shorts as well. And that's why now you have the long position that's moved to around 54% or thereabouts. So the swing factor yesterday was around 25,000 contracts. And if you pull up a chart, you'll see now the FIs are net long, and it's the highest net long that we have seen all the way since April 2024. So just keep that in mind. We were short. Then, in fact, we moved into net long, and now we're close to around 50,000 contracts on the net long side itself. What about the options data? 23,000 call, 23,100 call. Last few sessions, you've seen aggressive writing out here. And the premium has come down to around 80 and around 45. A couple of sessions ago, the premium on the 23,100 call was, close to around 100 rupees. And also the 23,200 call was far higher. We're facing resistance at higher levels, and that's pretty clear. Last couple of sessions, we're going to around the 23,000, 23,100 odd mark and doing a U-turn from there. Even on the Nifty Bank, that 49,500, 49,600 odd mark seems to be a bit of a congestion zone. So going by the options data, going by the resistance points, let's get to the levels. The Nifty seems to be in this broad 500-point range, and I have been maintaining this for the last few sessions as well. On the downside, 22,700, which was a bit of a resistance when we were going up. That becomes a support on the upside, the 23,200 odd. The Nifty Bank is going to be crucial today because it plays out the weekly expiry. Resistance from where we did a U-turn a couple of sessions ago. Earlier, we had a bit of a resistance at this level. That's 48,700, which now becomes a bit of a support. And then the 20 DMA in terms of a reference point. Since it's a stock-specific market, the one thing that I'm looking at is Cummins. It comes out with its numbers today. The delivery volumes that we saw a couple of sessions ago was close to around 15 lakh shares or thereabouts. And that's the highest that we have seen in nearly around the last 7-8 months or thereabouts. So big delivery is what we're seeing. Yesterday the stock ended at a fresh 52-week high as well. And if you pull up the chart, you'll see that though the markets are under pressure, that one ended virtually at the high point of the day. So Cummins is a stock that I'll keep on my radar.
Okay, as always, thanks a lot for that. 42% higher in the last 3 months. Definitely a stock to look at. But let's get straight to individual ideas now. In the sense, let's get you some opinion. This is a big week for the market, and Mahesh Nandurkar of Jefferies says that domestic equity inflows during 2024 so far are a staggering $7 billion per month, which would be nearly 2 times the previous high and more than 3 times year on year as domestic investors position for strong election results. He says at near 20% of financial savings and with the predictable flows to equity at less than half, the risk of domestic flow reversal is rising. He also says potential regulatory action on derivatives could be a trigger. He adds FPIs would likely buy the dips, limiting the downside on the large caps.
Okay, well, we've got Vikash Kumar Jain of CLSA who's also weighing in. He says that from the F&O universe of 183 liquid stocks, they've identified 54 companies which are perceived as direct beneficiaries of PM Modi's policies. Half of these are PSUs. He says remarkably 90% of Modi stocks have beaten the Nifty in the election-focused rally over the past 6 months versus only 42% of other companies outperforming, and this may continue in the case of a strong election result. He says L&T, NTPC, NHPC, PFC, ONGC, IGL, MGL, Bharti, Indus Tower, Reliance are some of the preferred Modi stocks for CLSA analysts. However, he adds this narrow election theme-based rally may end in June or July, and they see banks as the best risk-reward India growth play in the second half of 2024.
Okay, let's also get you some money market views on the rupee. Kunal Sudhani of Shinhan Bank says Fed Reserve officials flood the news wires. Inflation concerns weigh on the dollar. But Minneapolis Fed President Kashkari's comments on rates did bolster the dollar. He adds the dollar index continues to find support at 104.1, while Brent crude saw some up move. For the dollar, INR 83.10 acts as a support, while 83.30 is a resistance.
Okay, all right. Well, those are reviews coming in on different asset classes at this point in time. All right. On bonds, we've got Neeraj Gambhir who weighs in. Bonds rallied after RBI approved transfer of 2.1 lakh crores as dividend to central government. Government securities auction also strong demand with the 15-year paper cutoff coming in better than market expectations. The 10-year G6 saw profit booking near 6.97 levels. They expect the 10-year benchmark bond to now trade between a range of 6.95% and 7.05% before the general election outcome early next week.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run you through the list. We're looking at Hindalco, Amara Raja, Aditya Birla Fashion, RR Kabel, MedPlus Health, Aster DM, Campus Activewear, and NBCC. All of them will be reacting to positive news flow overnight, while we have PNB Housing Finance and IRCTC that will be reacting to negative news flow.
Okay, well.